Good morning, listeners. This is Almus Market Mornings, rounding up the financial market updates for you with Jayaram Krishnamurthy. And folks, we have had a few updates yesterday, just like the German business confidence falling for the first time in 2024. Even the Bloomberg index for liquidity in government bonds for major economies seems to be showing worsening signs. So, all these put together, should we have any dampeners in the activity going forward? It can be a good question. Even the CBO has raised the US government's fiscal deficit to $1.9 trillion. On the contrary, if you see, uh, talking about deficits, Indian current account deficit data was released yesterday, which was at 0.7% of GDP for FY24 compared to 2% of GDP in FY23. So, JK, what do we make out of these developments and what's your expectation?
Good morning, Shikhar. Yesterday was kind of moderate amount of news in the market. One, of course, was the German number, the forward-looking business survey from the IFO Institute that showed a contraction, or rather a fall in the index for the first time this year. And this is now actually becoming a short-term, maybe reversal in the recovery that we saw in the Eurozone. And there was a drop in the manufacturing activity, but in the services side, it was okay. And this also follows the S&P Global PMI survey that came a day earlier, which also showed that there was a drop in the level of activity in the Eurozone. So in fact, the IFO Institute has said that Germany is struggling to get out of the stagflationary situation. On the other side, in Japan, we mentioned yesterday we were at an inflection point as far as the Japanese yen is concerned at 160. So as we approached that level, there was a sharp drop in the dollar to around 158.80. But no one confirms that there was an intervention. It's possible that, as we reach the previous 34-year high, there was some large sell order in the dollar that was going through. But yes, it's going to be an effort to break that 160 level with, the authorities snooping around. Therefore, I would think still that the dollar yen takes some time, even if it has to break higher. And yes, there is reason to wait for that to happen as well, because the PCE core inflation that's due to be released this week is estimated to fall. And this is not surprising because we had the CPI and the PPI number from the US this month had dropped well below the expectations. In fact, month on month, CPI number was zero. Although Fed members continue to say there will be only one rate cut this year, market is presuming two rate cuts, and the cut probability in September is now up at 67%. So the point I'm making is that dollar is unlikely to post much gains, or rather it may actually correct down ahead of the PCE inflation number that is due this week. Of course, before that, we'll also have the GDP data from US, where the previous estimate was at 1.3%. Yeah, coming to the domestic market, the dollar rupee once again failed to hold above 83.55. And this seems to be the bond market flows are ongoing now. The JP Morgan index flows, of course, a major chunk of it is yet to come. But yes, whenever there is an uptick towards 83.50, 560, we are seeing good inflows that is taking care of the rupee weakness without RBI having to do much on that. Yes, a sentiment booster in terms of current account surplus of 5.7 billion or 0.6% of GDP in March quarter. And this is after, the 20 quarters that we are seeing this rise to a surplus from a deficit position, and this was compared to deficit of 1.3 billion or 0.2% year ago, and 1% of GDP that was seen in the quarter ending December 2023. What really helped was a sharp drop in the trade deficit that we had seen in the Jan-March quarter, increase in the private transfer receipts, and the non-resident deposits also rising to 5.4 billion from 3.6 billion. So all these together actually helped the deficit to turn into a surplus. And of course, for the full year, the deficit has moderated to 0.7%. Earlier, the estimate was that it should be at around 1%. The current account deficit, of course, this is again a backward-looking number like GDP, and what we are, interested in is whether this will be maintained, whether India will continue to post surplus in the coming quarters. That I think immediately the picture is not so encouraging in that respect, because we are seeing trade deficit this quarter actually rising. Already for 2 months of April and May, we have about 44 billion of merchandise deficit, which is well above the previous quarter. And if you project the same average for the next month, you would be around 66 or 67 billion of merchandise trade deficit, which was which is more than what we saw in the December quarter. Therefore, current account and the inflows from private receipts and NRIs may also not stand at the record level that we saw in the previous quarter. All put together, I would say this surplus might have been a one-off, and we will be back into deficit mode, but definitely in a very manageable level of around 1% is what I expect. Therefore, nothing much concerning, because we are expecting large flows for bond market, as well as India's growth would be also attracting larger FDIs this year. So BOP terms, India will have very comfortable position, and that way the external macro is definitely not going to be a challenge for the rupee. If at all the rupee is challenged, it will be only from other factors like the relative movement of dollar versus other currencies is what we are looking at. I think in the short term, rupee still continues to stay in the range. I would think that last week's up move of dollar rupee towards 83.67 was an aberration. And for the time being, we are going to stay downside. Definitely looks solid because of bids from central bank itself and importers' interest. But this week's PCE number, which is probably going to see some downward move in the dollar, will also help the rupee to be somewhat firmer this week, and also aided by the expected flows. This week is going to be some good data. We'll also have preliminary inflation numbers from some of the Eurozone countries, which is very important. And then we'll round off the week with the first phase of the French election. Don't forget that we will also have a debate between Biden and Trump, which the market is very eagerly looking forward to in the coming days. And some people are mentioning about Trump's earlier stand that dollar is extremely strong or something. I mean, we'll have to see whether these statements ahead of the election will make some difference to the markets or not. But yes, definitely markets have a lot to chew on this week. Thank you.
Okay, JK, that was really good. And yes, folks, we have a lot to chew on, as JK mentioned. For example, the possible intervention in JPY by the BOJ, as it continues to show it's going to take some effort to break the 160 levels. Apart from that, as we can see, the German IFO numbers, or the business confidence numbers, have shown a fall from 2024's numbers. And would this be a question on the Eurozone's nascent recovery that everyone's been talking about? Is something that time shall tell. But having said that, on the domestic front, yes, folks, we have JPM flows hitting the markets, and there's going to be some more this week. But a major sentiment booster was the CAD numbers, which was on the Q4 front positive from what we've been seeing, and even on the overall side, it has been better than what we've seen in the previous years. And a comfortable BOP, as JK mentioned, on the backdrop of expected flows from FPIs and the JPM flows, can be one of the possible positives for the Indian markets. But having said that, the trade deficit continues to be an erratic number. So that's about it for the Indian markets. But one quite interesting thing is still to come forward, is the debate between Biden and Trump. So, folks, let's see how things go about in the coming days. That's it for today, and we shall come back again tomorrow with another round of updates. Thank you so much for joining.